Welcome back to the Malaysia Money Matters Show. It's the 31st of October 25.
And today we're doing a pretty critical deep dive. We're looking at how global trade ups and downs connect with what's happening right here with Malaysian companies, giving you the essential insight you need.
Okay, let's kick off with the local corporate scene then. The earnings season, well, it sent some pretty clear signals of caution. Bursa Malaysia, the exchange itself, has trimmed its 2025 profit targets quite a bit.
Yeah, significantly. Down from, what, RM369 million, RM408 million, now looking at RM314 million, RM347 million for profit before tax. That's after a softer third quarter. Net profit dropped over 25%. Markets are softer.
And you really see that caution in consumer stuff, too.
Yeah.
British American Tobacco, BAT, wow. Net profit tumbled nearly 90% in Q3, an all-time low.
That's huge. And it seems directly linked to new rules, right? Like the picture warnings, the retail display ban. Their combustible sales volume fell almost by half, a direct impact.
It was a bit mixed elsewhere, though. CTOS Digital, for instance, their profit dipped about 10.4%, even though revenue climbed 4%. They mentioned lower contributions from associates, higher costs, too.
True, but then you had Pavilion REIT doing okay. Net property income up 10% in the third quarter. That was helped by new assets they bought, like Banyan Tree Kuala Lumpur, and Pavilion Bukit Jalil performed better too.
Right, and always watch out for those one-offs. Tech Plantations posted a record quarterly profit, like over 5 times last year's.
Massive number, but driven largely by an associate selling off land. So they're already saying, FY 2026 earnings will likely be lower. That game probably won't repeat.
Okay, let's switch gears to restructuring. This is where some big strategic plays are happening. Capital A, they expect to get out of PN17 status in December. That's the financially distressed classification.
And that's tied to getting their airline consolidation done. But the really interesting part, they're focusing on listing their non-aviation businesses, AirAsia, Next Digital, services over on the NASDAQ, chasing that tech valuation clearly.
A big pivot. Similar story with EWI Capital, isn't it?
Yeah.
Used to be property development, now they're going full investment holding.
Exactly. They're putting RM276.5 million into an Australian prime office fund, aiming for returns over 10% annually, a definite shift away from development risk.
We're also seeing moves in logistics. Farmaniaga bought 2 industrial buildings, Terengganu and Sarawak, for RM30.5 million. Strengthening distribution.
Right, and that's part of their plan to exit PN17 as well, targeting Q1 2026. Seems like companies are shoring up operations.
And big contracts still rolling in. AWC got a major RM99 million contract from TM Technology Services, Integrated Facilities Management, a 5-year deal.
Plus, new players emerging. Aquawat Group, the operator of Aquaria KLCC, they're launching an ACE market IPO. Funding upgrades and new oceanariums, one in Kota Kinabalu, one in Java.
And a new airline. Ascend Airways Malaysia got its operating approvals. They're set to start cargo flights in November.
Busy times. Quickly on market moves and governance, Paracore saw its price surge a 6-year high. They say they can't explain it, but are talking about potential ventures.
And K&M Group shareholders. They voted to adjourn that controversial EGM about selling its German unit, pushed it until after its delisting date next month. Signals some serious shareholder issues there.
Yeah, definitely. And just regionally, CIMB Niaga, CIMB's Indonesian subsidiary, reported a near 3% rise in 9-month net profit. Good loan growth across the board showing resilience.
Okay, let's broaden out now. International political regulatory stuff. This is where a lot of the recent volatility has come from.
For sure. Big news on U.S.-China trade. President Trump and President Xi reached a deal. Some U.S. tariffs trimmed, like having the fentanyl-related ones to 10%.
And crucially, China paused its export controls on rare earths for a year. That gives the market some breathing room, even if temporary.
But then you have the U.S. Fed. They cut rates by a 1/4 point. But Chair Powell, well, he suggested that might be it for 2025. Cited policy division, uncertainty, lack of government data too, mixed signals there.
And that U.S.-China tension is hitting supply chains hard, isn't it? Car makers globally bracing for production cuts.
Yeah, it's a chip shortage problem. Specifically chips for vehicle control systems, exports frozen because of the dispute. Real-world impact.
And globally, defense postures seem to be hardening. Trump ordered the U.S. military to resume nuclear weapons testing immediately.
And greenlit South Korea to build a nuclear-powered submarine using a U.S. shipyard. Significant geopolitical moves.
Okay, bring it back home to Malaysia. Policy focus on housing is ramping up. The ministry is announcing 5 reforms next month. Big goal. Eliminate abandoned private projects by 2030.
And they're really pushing that 10.90 build then sell model, trying to give buyers more protection.
This ties into that rising political heat around resources, particularly rare earths. The four opposition-led states, SG4, they're asserting their constitutional rights.
Yeah, they're warning Putrajaya, basically saying, don't repeat past oil royalty mistakes. Demanding equity, fair profit sharing, a major point of contention.
And amidst this, we saw the Malaysia-U.S. Agreement on Reciprocal Trade signed. PMR confirmed it, aimed at securing investment, especially data centers, AI.
Important point you made. It includes an exit clause, doesn't compromise sovereignty, trying to balance investment needs with national interests.
Also on the domestic front, Parliament's reviewing the Lindun 24/7 Social Security scheme. Employers are pushing for fair contributions, actuarially sound, sustainable.
And security enforcement actions were quite prominent. Malaysia is launching the Advanced Passenger Screening System, APSS, today, October 31st, strengthening border control.
Plus, the police arrested over 2,000 people. A huge crackdown on mule accounts used in online fraud. Shows the scale of that problem.
And MyCC wasn't quiet either. Penalties of nearly RM100 million, RM97.3 million to be exact, on 26 companies for bid rigging cartels. Strong action.
Finally, some quick legal updates. In the 1MDB Tenor trial, the prosecution argued Najib Razak was the orchestrator, not a victim, called his court address political theater.
And in Lim Guan Ang's undersea tunnel trial, the defense claimed bias from the MACC investigator, trying to get statements thrown out. Also, the High Court ordered Telegram to shut down 2 channels, EDC Siasat and EDC Cause, due to harmful content allegations.
Wow, okay, so quite a deep dive there. Really shows those tight links between, say, a global trade truce and shifts right here in the local market.
Absolutely. And maybe the key thing for you, the listener, to think about is this. You've got this strong local push on infrastructure like REs, housing, AI. How does Malaysia balance that growing pressure for localized, fair resource wealth sharing with the undeniable need for major foreign investment to fuel those sectors? That's the tightrope they're walking.
A really vital question to mull over. Don't miss our ongoing analysis. Make sure you subscribe to the Malaysian Money Matters podcast. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.